So there you are buying based on what Citi wrote, and now they've taken the market down. So they might say 40 and it could be right, but on a short-term basis, it probably is take the contrarian view. But in the longer term, they're basically setting it up so that they're kind of ahead of the curve as this market really goes into the last and final phase, which I think will be about a year and a half, 2 years from now. Just educated guess, where we get into the manic phase where real estate's doing horrible, stocks are falling, we don't know what the dollar's going to do, and all of a sudden there's this big rush to precious metals by everybody, public and institutions.
DavidMorgan, a leading silver expert, recently noted that major institutions like Citi could influence silver markets by forecasting significant price rises, such as a $40 target, while manipulating sentiment. He warns that this can attract inexperienced investors who may face losses if they enter the market without proper timing. Silver rose to around $31.50 during Friday's New York session, as demand for the white metal strengthened following the release of the U.S. Producer Price Index data for September. Despite a steady U.S. dollar, silver continued its upward momentum, breaking above a key horizontal resistance at $31.30, which now acts as support. With silver surpassing the 20-period exponential moving average, which hovers near $31.50, the near-term outlook has turned bullish, with expectations for an extension toward the October high of $33. Morgan further underscores silver's unique role beyond monetary uses, suggesting it could become vital for any society's technological advancement. While gold may traditionally underpin financial systems, Morgan argues that silver is poised to be crucial in future technological competitiveness due to its expanding industrial applications, including advanced batteries and electronic devices. Silver's appeal has indeed been global, as it continues to set new all-time highs in several foreign currencies, indicating widespread investor interest. The metal has already reached record levels against currencies such as the Indian rupee and Australian dollar, and is nearing all-time highs in others, including the Canadian dollar and euro. Whether this trend reflects alleged silver suppression, currency divergences, or other factors is open to debate, yet may be irrelevant to investors focused on silver's upward trajectory. What truly matters is silver's ability to attract global attention, suggesting a positive outlook and highlighting its potential as a strategic asset in today's evolving economy. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
I know I contradicted myself, but having gone through this market, when I was your age or younger, and knowing how it works or having a pretty good feel for it, is it's both. First of all, I know that when Wall Street gets behind the cryptocurrencies, it's almost a guarantee to go ahead and go along with them. So here we have Citi saying something about silver, for crying out loud. But at the same time, they're putting out that $40 call. They're probably technically aware, I'm sure they are, of where we are at this point in time. So people see that, so they lure in the people that are really not that savvy, see, oh, the mainstream's talking about, so I never thought of it. Oh, look it up. And I hear a couple of my interviews, maybe somebody else's, and say, oh my goodness, silver's undervalued. Probably one of the most undervalued assets I'm buying, without any thought about timing the purchase, which is okay if you take a dollar cost average approach. But if you say, oh, silver's great, here's half my life savings, I'm going to throw it in the silver market, you don't want to do that. So there you are buying based on what Citi wrote, and now they've taken the market down. So they might say 40 and it could be right, but on a short-term basis, it probably is take the contrarian view. But in the longer term, they're basically setting it up so that they're kind of ahead of the curve as this market really goes into the last and final phase, which I think will be about a year and a half, 2 years from now. Just educated guess, where we get into the manic phase where real estate's doing horrible, stocks are falling, we don't know what the dollar's going to do, and all of a sudden there's this big rush to precious metals by everybody. Most of these larger entities, I mean, you look at like a money manager or a mutual fund or an ETF or any managed money with a professional, they know that you accumulate and over time and you distribute over time. In other words, you don't go into the market and make a big purchase and move the price, because a big buy or a big sell will move the price almost instantly. So they'll accumulate. So I don't know what their long-term plans are, but what I do know is what they know. And that is silver is probably the most strategic metal in existence for a high-tech society. And they see that coming. So not only for, everything that we have now, but the future inventions, maybe going to a silver-based battery for EVs, for an example. Samsung put out an article. There's a little bit of distortion on the web about that, but I won't go into it at this time. regardless, there's more and more uses for silver all the time, especially in the battery market that no one's really that aware of. So there's a lot of advantages, but silver costs more. But it's it costs more in the aggregate in the long run. If you've got to replace your batteries in your in your Tesla every so often, but silver goes on for 2 or 3 times as long a life, and you go through that over the time frame, actually silver may not cost as much if you use cost depreciation. So I get too technical here. Point is that there's a lot of uses for silver. So the old adage that he who owns the gold makes the rules, that may be true for the monetary system. But if you really think about it, and I'm just throwing this out for a thought experiment, but he who owns the silver owns the technical. I mean, without silver, you really are not going to be a technically viable country, nation state, city, whatever. So in other words, just again, as a thought experiment, if you were short on silver, you couldn't do the next generation tablet, for example, because you couldn't access that element. You would be looking to, someone that had it. Are we going to get that tight in the silver market? I don't know. But the way you ensure that you're not is to think ahead and buy ahead and warehouse what you need for, let's say, the next whatever months, years. And that way you rest assured that you do not lose the technological battle going forward.
The silver market is showing strong support near the $30 level, which now appears to be a firm floor. This foundation suggests that silver may be well positioned for further gains, driven in part by ongoing central bank actions and liquidity measures. Silver benefits from diverse demand as both a precious and industrial metal, particularly as industrial uses continue to expand. DavidMorgan notes that many investors may not fully appreciate how market dynamics can propel silver prices to new highs. While the standard strategy of buy low, sell high remains popular, few understand the power of scarcity combined with rising demand. As supply tightens, market momentum can lead to rapid and significant price increases. For those considering short positions, caution is advised. Despite periods of consolidation, silver has displayed substantial strength and could quickly reverse course, making short selling risky. Instead, investors might look for value on price dips, which could present opportunities to buy into a market supported by both industrial demand and broader economic factors. Let's get back to the interview.
Well, technically, and technical analysis does work. It's not perfect. But once you get to a new high in anything, a stock or a commodity, what happens is a psychological event. Everybody that bought that silver at $30 and now it's at 35, almost all of them are going to hold it because now they're in the profit zone and they ask themselves, how high is high? It's only gone up $5 from where I bought it. DavidMorgan said in 2003, silver would go to 100. We're only a third of the way there. I'm holding. So that means that the float, as you would say in a stock, the amount of shares that are available to the market dries up. So any new buyer has to go into what's available at the market to buy it. There's not much available, so they have to bid the price higher. So now it goes to $40. Well, now those $30 buyers might say, 40, I'm going to take a little bit of profit here. But a lot of them will just hold and say, how high is high? So there's nothing more bullish in a market than a new high. And what happens is, as the market goes higher and higher, everyone's holding, watching it go up, and they're in a profit zone. So they hold on to what they have. And now a new buyer's going into a less and less supply of available stock or available silver. And so a little bit of buying has a lot of buying pressure to the upside. And that continues till you get to the mania phase where FOMO sets in and the fear of missing out. Now that silver's at 50 and someone never said it, 50, it's probably going to stall out, but it's probably going to stall out, consolidate and go above 50 and start trading above 50 for the first time in my lifetime. And once it gets to 60 or 70, people are going, oh my goodness, what's going on with silver? And then there's a lot of people that are scared to buy because it's so high, but they'll buy a little bit because of the fear of missing out. So they'll put $10 into $100, $50, $1,000 into the silver market, and all those people late to the party will buy, and that'll force the price even higher. So I'm still bullish on the market. I mean, that's an outline of how markets move. Most people don't understand that. They're taught to buy low, sell high. There's nothing wrong with that idea, but they don't understand how a market goes ballistic or exponential or hits the hockey stick. And that's because the supply dries up because people are in a profit zone. They want to hold it. They don't want to sell it. I do my own work. I'm not always right, but if you check the record, probably better than most. And a lot of my friends are technically saying, we're here, we're right at the top, we're ready to blow through. And I'm saying not yet. I think the market's going to consolidate here. I think we could get a bear trap. I think that on both metals, because they pretty much travel together, there's still like an 80% correlation. that everyone expects gold to go up because of the war problem with, the Middle East, and of course the Ukraine thing isn't going away. And then we got the election that's uncertain. I mean, there's all kinds of fundamental factors that push the metals higher. Being in this market for decades, I know that that's the time it's going to pause, because there's so many reasons that everybody knows it should be going higher, and it disappoints them. So we could see a correction here in gold, and enough of one to scare the early adopters out. I don't know how much that is, $100, $200, I don't know. $300, I don't know. But something along those lines, and probably not for very long, 2 months, maybe 3 months, maybe. Of course, I could be wrong, but that's what I see. And so I would say, look for that. If I am wrong, then you just approach it differently. If it starts to run away, you don't chase it, you just average in. So you buy that higher high and that higher high and that higher high and that higher high, but at least you're not getting burned because you're using discipline. So if it goes from 30 to 100, and you buy it every month, let's just say it goes up $10 every month, which is ridiculous, but I can do it in my head. So you buy $1,000 at 30, $1,000 at 40, $1,000 at 50, $1,000 at 60. So now what you're doing is your risk is actually mitigating, because you're adding less purchase, although the dollar amount's the same, you're buying less of the commodity or the stock, whatever. Because that's what you want to do. You don't want to add a big amount at the top of the market. As it gets higher and higher, you want to use less and less. And that's what dollar cost averaging forces you to do. But I really do think we're going to get at least a sideways movement here, maybe not a correction. I coined the phrase, scare you out or wear you out. Everyone expects gold and silver to go up from here. Let's just say silver just can't get above 32 for the next 3 months. That alone will disappoint some people. They'll come back and say, well, yeah, so-and-so said it's going higher, and you said it's going higher, and the technical indicator said it's going higher. We're right at the cusp of going higher, and, it's not. I'm tired. I'm getting out of this market. I bought it 30, it's at 32. My dealer will give me 31.50 for it. I'm done,
Silver's recent price movement reflects a mix of technical resilience and growing demand from both monetary and industrial sectors. With the $30 level proving to be a strong support, the metal seems poised for further gains, particularly as investors seek opportunities amid potential supply constraints. As central bank policies and global economic conditions continue to evolve, silver remains a key asset to watch in the coming months. Do you see it breaking into new highs, or do you expect a different trajectory? Share your insights in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.